Could you please? Could you please? Could you please? Could you please say the fire now is closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Take my hand, I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part on coming on into the live. Let's take a look at what we saw in the charts. We had a huge liquidity grab to the downside. We talked about if we cannot hold these ranges on the 3-month time frame, we're going to come back into this liquidity. It was looking juicy, and sure enough, they came right down and snagged all of it in one foul swoop. Let's go take a look in detail where they grabbed. We got the levels tracked out for you in the process in Rainman's Discord and in the Momentum Master Discord. And we are seeing some rockets print down here. So we decided to do a little limit order in on a fair value gap here below the 618 in this region just to see what would happen. And while I was working, as a teacher, you have a lot of meetings for the next year's curriculum, which starts in April in Japan. So that's what we were doing. So let's see what happened. So first, let's go into the liquidity right off the bat and see what happened. How y'all doing today? It is Run for Profit Friday. In case you haven't learned the way the week crumbles, you got false move Monday, Tuesday, Wednesday, move for the week, Thursday, midweek reversal, which we didn't see much of, and Run for Profit Friday. And they sure ran for profit here in Asia. And it looks like we're currently now 29 billion in imbalance in short liquidity. Largest bubble up here just before we dropped into the range here. Let's zoom in to see where that is. So we have $329 million at 21.9, and another 329 at 21.4, and another $329 million at 21.2. So if those people don't close out their trades and pay themselves, there is a possibility that it could slowly invert its head and shoulders back up to the upside. There are no guarantees in trading. Just because we entered the bullish sentiment does not mean necessarily bear markets or anything like that. We live one liquidity grab at a time, folks. One liquidity grab at a time. There is no guarantees for 100K. There is no guarantees for 9K. Let's go look into the charts and see where it can go. And you want to catch those pivot moments, those crossover events, those cloud thinning opportunities to whichever direction it wants to go. And before we do that, we look at what liquidity imbalances may lie in the charts disguised as the market makers' traps being sprung and how they're rebounding back up from there. The 7-day, all of this got taken at 20,200. This doesn't really mean anything on the 7-day chart for how much they induced. They did induce more shorts during this time as the bearish sentiment was looming. But that was not enough to offset the monthly and 3-month charts here. As we see, they came down, and with a fervor, they came and took all of these double digits in the billions of liquidity all the way down, all the way down. They didn't even stop for a moment, no moment's hesitation, all the way down to 19.6, probably over $200 billion by the looks of it in that time frame anyway. Let's go to the higher time frame. Do we still have the possibility of going lower? We sure do. We have a $48 billion here at 18.8, 44 billion at 18.6, 49 billion. That was, let's just go with what was taken. We got 28, 40, 42, 49, 30, 19, 31, 37, 28, 20, 29, 28, 30. And that was about where we stopped and bounced. Why did we bounce exactly? We'll come back to this liquidity and just go into the fair value gap that existed over here. Let's get out of this and go into the fair value gap as we saw it. And I've had this here since this occurred. I just left it there in case we ever came back to it, which they tend to do. So if you were looking at the 4-hour time frame, you'd say, well, this whole thing is a fair value gap, and that's true. But if you drop to a lower time frame, you will see that the fair value gap is too fast for the internet's own good. So if you go to the lower time frame, you will see that they didn't retrace back into it up into a certain extent. So this wick here dictates that they went back and recovered this much of that vector. And if you go to even smaller time frame on the 15-minute, Oops. It still shows that you had that much more to go. So we'll just leave this up to just show you where. And if I go to an even smaller time frame, you'll probably see candles within this 15-minute candle, which did come back to it. Yes, you did. And so right here, it came back and recovered to that point, which is why I made the box from this point to this point. And so within this range here is a fair value gap, which they came back to recover. The liquidity was seated in that zone. And that also coincided with into the 618 traders got juked out a little bit, and they went back down into in between the 0.65, 0.66 region. Now I do have a checklist here for the break of structure retrace regions here. So an entry checklist formula that I do provide the you would want to retrace into a 62706 region, somewhere in this region, and if fair value gap coincides with that, you're bound to see some sort of bounce if it coincides with a higher time frame outlook. We'll get it. I don't have that prepared for today, but basically that is what happened. So if we go back to this and exit out, so it's worth the shot. You set your stop loss below and you just do what you're going to do for the day. You set a limit order in and just see what happens if you chart out the trade. And so you had this break of structure retrace back down. You could just look at this as that happening, and we're back in this pocket of this entire range. If you just take it from the top, from the bottom to the top, that is the golden pocket region we are back at. So you could see some sort of bullish order block getting tapped here, and it could be coming back out of this. If you can close above this 1618, you start to make these projections out of the mud, so to speak, and it coincides with the liquidity on these 1 minute time frames. Like they went and got, let's zoom in even further here. So they got $122 million there. They kind of like reset a little bit, took a sigh of relief there as they released it. And there's still some more caking their way up to the upside. So these guys are kind of underwater at this point. You can see where they opened their trade. Whoops. Let's zoom in a little bit more. So these guys are underwater. You don't need exo charts, although there's, as I said many times, there's more than one way to skin a cat. So exo charts will tell you this stuff too, but the more you put time into anything, the more you get to see how it operates. So right here where this bubble is, this is where they opened a short. This is their liquidation point. It went and grabbed it. All right, here, this is where they opened a short at this point in time down here, which shows they're underwater. As they traverse up, they went and grabbed it. And this guy also opened it at this moment in time, and they're underwater. And are they going to go grab it? There's no necessarily end in sight. You just could juxtapose with how much is building on the other side of the trade, how much dead weight of longs is appearing, and that's how you can kind of see where they're aiming at. So it looks like they induced a lot all the way up to here. So for the interim, you could see a little relief rally to release some of the short liquidity before continuing back down, which at least would take you back up to $20,500 based off of these trap shorts right now. As of this moment in time, they opened it here, so they are underwater. So this whole pool right here is induced and trapped if they don't close, and it's stacked right here. So this 20,394 region could be likely to be the case based off this liquidity, but you have this large amount up here too. So, and each time a large short closes out their short, it causes it to cannibalize the late shorts. So they eat the late shorts because they buy at their liquidation point. So this guy, if they closed, it would cause Bitcoin to go up and liquidate some of these guys. So it's the shorts cannibalize their own, and the longs cannibalize their own when they sell too. So it's kind of interesting. So if this guy closed out a short in profit, it would surge up and close out the liquidity down here. So you could be seeing the shorts closing out, causing the bounce, which continues to the downside to that liquidity we are talking about down here at 18.8, 18.6 and below. So, you know, there are no guarantees. Even though a rocket ship did print on Momentum Master at that moment in time, it didn't lock in. The way the rocket ships work, all right, so I'll go into a little bit of detail and show you something about the schematic of the website real quick. So let's go here to momentummaster.info, link in the description, and we're going to look at what I traced over price action from the current bottom of Bitcoin at 15K. So at this 15K region, we got a rocket locked in here. And what does that rocket represent? Well, I believe this is like a 15-minute time frame, if I'm not mistaken. It could have been hourly. I think it's 15, but it locked in these rocket ships, and it never went below that point. And this was your bottom for the market, essentially. So when these rocket ships lock in, and you get these crystal divergences, the money flow divergence, and the rising sun, and all these criteria on the indicator, which you can check out on the website and see all of what each thing means at your leisure, or you can toggle them all and see how they work together. And yeah, so when these rocket ships play, they play pretty hard. So it could be a positional to the upside as well, to that 25.6 region if we were so inclined. So I don't deny the rockets when they appear. I see them as opportunities, and sure enough, we're surging back up out of that region where the rocket occurred, locked in stone here. And yeah, let's go to lower time frames and see where that rocket was occurring on lower time frames, and did it lock in. So my concern is, so that elasticity of it going down, I set my stop loss into profit because I thought it could go lower, and then it started to go down, and I set limit orders for more during my lunch break. So what you do is, let's turn on the ultimate and see where it is. Sometimes it doesn't show up if you have the history off, but you would get an alert in the moment in time, which we did, but I was in meetings all day. So this is where you'd have to go into the bathroom and set a limit order. Yeah, so it didn't lock in for whatever reason. Let's go to a lower time frame and see if it locked in on the lower time frames. I was watching it on the 1 minute before I had to go to work around here. So it doesn't look like it locked in the rockets for some reason. It either got bought up as they appeared, or I'm unclear why it didn't lock in. But either way, it did appear because we sent that alert out. But ideally, if you see like a 4-hour time frame, so for here, for example, on the 12-hour, you don't see a nuke, right? But if we go to the 1-hour time frame, there was a nuke that locked in at the top of Bitcoin as well, which was overextension on all these time frames. So we had that here, and then that was the exact top, and that appeared in the moment. Guys in the Discord pointed it out, and so that's what you want to see on an hourly or 4-hour time frame, a rocket ship lock in, and then that will likely be something that, you know, never goes below that point. So I'm not sold necessarily on the rocket ship that appeared, but it did appear, however brief, and it coincided with the entire impulse fib level and a fair value gap that was there. And yeah, that's why it seemed to have a bounce there out of nowhere, and they absorbed some liquidity. And they sometimes leave stuff in the charts too, like that. There's no guarantee that it will come there just because it's hot. If you go to the yearly time frame, I can show you a case in point on both sides of the equation. There's no guarantees in trading, there's no guarantees in life, and sometimes they let some people live unscathed, like a messenger, a scout in a battle that they go tell your king that we're coming for them. So they left 100 billion there at 15.2. Why did they do that? I have no idea. And same thing here. They left 162 billion at 25.6. Why did they do that? I have no idea. So it just picks a moment to just go the other way, and then this pool's been building, and now it's up to 200 billion at 15K now too. So this is how they induce stuff. They did the inducement trap of a double bottom, and then they said nope and took out all the liquidity, and then went up to the shorts who were calling for 10K. And then they thought it was the top was in, and they went up and created an extended M to the downside. So we were talking about once they grab this liquidity, are they going to make a stab back up to the upside? They have a lot of this caked up here still in a larger number than this. So how much of their fill do they take of this before they come up to here? That has always been the question. How much of their fill do they need? So you look for the context, you set your stops, you take profit along the way. But it doesn't necessarily mean we're going all the way to 15K, folks, because there's a large amount up here at between the 28 and the 25.6 region. So let's just go over it to reiterate before. We have 178, 110, 78, 130, 73, 121, 74, and that's up to 28K, and that's all in billions of dollars. So did they leave this alone when they went back up here? Did they leave it alone before they came back? And they did it with the fervor. So are they going to go with the fervor? And Jason Casper is calling this the the August pattern, where it's 1, 2, 3 hits to the high and then reverse. So are they going to do 1, 2, 3 hits and then reverse again? I have no idea, but it doesn't always necessarily have to double top. It can triple top too. And that's the liquidity. I think it's pretty clear to see what they did. And now we can go to the indicators. Let's make sure the mic wasn't muted. That's wrong. It moved from the falling wedge. Oh yes. The trend lines that adjust as you go. But it's all math, right? You know, that's so. Yeah. So the. So they got all this, and you still have this, a large amount below. 48 billion and 43 billion is not a little amount of money. Let's try to find out if this coincides with the fib on a smaller time frame from this impulse to this impulse. So we took the impulse. All right, we're seeing some surge up out of here, just as we said. And we could go up to this 1382 region at 2,500 to coincide with that big bubble we were talking about. So once again, this fib was taken from the start of the impulse to the end of the rally, from the low to the high, essentially, and it gives you this pocket. But let's be a little bit more precise with a range here. So we'll take a fib from here, from the start to this region. So this 18,210 region on this range could be, you could get the 618 at 18,219. If it does go lower than that, and 18,219, yeah, that would coincide with this entire thick pool here. So you get all the way to this last 31 billion. So you could see another bounce there if it does continue lower eventually. So that would clear out the pools completely for that retrace idea for just this local level. So you just do these little pockets and you draw fibs on these things, and you just test the math, test the waters, test your system, see if it can be broken. And yeah, so we're so far seeing a bounce here based off the rocket ships and all the other liquidity grabs and all that stuff. As I said, one of the criteria for entering needs to be a liquidity grab. These are higher probability things because now there's an imbalance up here. They've cleared the imbalance to a degree, so you see that kind of bounce. And while everyone's getting bearish too, a lot of the noobs short, just like we saw on the 1 minute time frame with all these underwater guys here. All of these bubbles you see on the upside here are underwater. as of this point in time at 19.6 they shorted, and now they're underwater praying for a miracle. And these are what you would call neophyte traders. They're noobs, and so they just short the bottoms of stuff, and let's pray for their loss, because most likely they're going to get wrecked in some way, shape, or form. So let's go to the indicators now. We could turn on the indicators and see some stuff that perhaps we didn't see, where we can glean. So there's also some divergence, if I'm not mistaken, on a hourly time frame. Wasn't the largest time frame, but it all has to start somewhere, and this is where you saw it on the, you had, I believe it was double divergence here. No, just RSI divergence, and you're getting the Williams crossover event as well. And yeah, you had these crossover failures here, and you have the MACD down here with you. So this MACD is kind of cool because it's a leading MACD that traverses both paths between a negative 100 value and 100 value. It's a normalized MACD. When your MACD comes down to say what's up to the Williams, he decides to have a little powwow with the Williams, and they tend to kind of go up in tandem from there. If you have the MACD up above as the William goes low, somebody pointed out to me, I think that was Smurf. Shout out to Smurf out there. Like, he was pointing out how if you get the MACD down below with the Williams, then you start to see these plays kind of play out more often than if they're above and it's below, similar to how it dropped here. So you wait for this to come down below with the Williams, and it comes out. There's just so much depth that you can glean from this. It seems like there's a lot going on, but when you know what each of the components is, and you can go here and look at all that stuff, you know, you can kind of take everything comes with time. You got to take your time with it. And you know, the MACD, normalized MACD, you can also get alerts when the lines cross on there too. So we had that hourly divergence, we had the crossover event, and it all has to start cascading from somewhere. So it started from the hourly, and let's look at, and we're also on the outskirts of the Keltner channel, similar to like a TDI. You go out of it, you start to come back into it. The volatility has you spring back. Now, I'm not completely sold on the idea, because you have to get above this ATR level, average true range level, and you have to get above the cloud, which is very thick. So what do we say? We come up to the thick cloud, you get rejected. So that would coincide also on the outskirts of the cloud with the 1382 bearish trend-based fib extension level and those bubbles we were talking about. So getting more above this level is just, you could play fib to fib, like long story short, if you like, as well. And these things all coincide with the outskirts of the cloud and whatnot. So you'd see this kind of come down and start to thin, and then you get rejected and you create a double bottom, and then you start to build your way out if that's the true narrative, or you would come back down to those liquidity pools down below. And let's go ahead, let's just secure a stop loss and a profit at least. And you're getting overextended on the hourly, double topping there. And let's go to the 15. Once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. So we got the 15-minute overextended here. You should see some sort of flagging out inducement point reaching the top of this. I see them coming up to this 20.01k region to get this little bit of happiness, and they possibly might cake in some more guys here. You're starting to get some bigger bubbles over here, which is different from the sparse nature up here. So you're starting to get some dead weight enter here, which causes the retrace back down. You got the inverse head and shoulder, right shoulder kind of possibility vibes going here. If this is a little bit too much for you, you got these lines over to the right hand side with the length of the line shows you the volume. So you can see where the stacked long volume is down here at 19.4 on this. And then you got more stacked volume of shorts up here at the 20,001 3 range. You could double click this and get out of that and start seeing up above. And once again, that's on the 1 minute time frame, which goes back 6 days of data, essentially a week. We're now 30 billion, nearing 30 billion of an imbalance in short liquidity. So the run for profit days could see some sort of bounce on both sides. They took out one side, they go take out the other a little bit, at least to a certain region within that idea. So let's draw a fib and see where the rejection could occur. We can start from the impulse here down to the bottom here. So the 618 would put you at nearing 21K for a rejection there. In terms of the liquidity, 21K would have you, I mean, it's thickly caked in on all of these things here. 21K would take you just up to there. Realistically, you have that big bubble of about 226 million at $20,878. So that little bit of happiness might get knocked out if it decides to go up to that region at the 618 and get rejected there. And that would coincide with that large amount of liquidity. But once again, you got these other bubbles which haven't been reclaimed yet either. So we got the 15-minute wanting to chill out here. You got the hourly overbought. You got the 4-hour, the 6-hour, the 12-hour, the 22-hour, and above, all saying we're good to go to the upside here. Are you getting that inverted head and shoulders idea of a double bottom? Let's see what the 4-hour has to say. We went too fast the other day, and then we ended up missing that bearish divergence on the live for the 6-hour. We missed this money flow divergence, which I'm upset about. We got that on the S&P, but yeah, we got to be careful with the time frames and what we're looking at. All right, and yeah, let's go to the 22. Everything's in a good spot. You know, you had the liquidity grab after the bullish divergence, and that was the inducement. So you're getting that kind of like scooping of the price action in a nice manner. You get the rising sun, bottom of the K-hole. You just got to make it up here at some stage. Ideally, you'd want to see something like this. You get up to the 618, then you flag out and you continue higher to make a little bit more juicy of that short chomping action. So you'd want to see something surge up first before it starts to fade here. This isn't a really good region to start fading out at in terms of if you're looking at a long scalp here. So let's go to the S&P. So we put the idea out there of the S&P bouncing at a certain level here, and then it ended up bearishly retesting and just breaking. Whoops, sorry, we're looking back too far. So we looked at the yes. So we put out the Fibonacci tool here, and then it came down. We were saying it was going to come down to this pocket region, and you could see a bounce, which we did, but it got rejected on this cloud, which was kind of thinning. And then it just dropped straight out of the cloud, ignored all the fibs, and just went for a liquidity grab of its own, which ended itself at this trend line, which we've been seeing bounces off of since way back in the day, since, you know, January of 2022. This trend line has been forming. And so, yeah, I remember pointing this out to the group when we got out of this initially, and we've just been kind of double tapping. Are we going to break back into this right now? If we break back into the range, this fair value gap comes back into play and negates this breakout idea continuing. We're currently this bearish trend-based fib extension tool. We'll show you how we did that for anyone new to the live. So what you do is you go to your trend-based fib extension level. You take the impulse, which was down to here, and then the retracement, which is up to here, and it projects to you some nice levels from this point forward in time where you could see downside. It's a bearish projection if it's going impulse, the retrace to the downside. And if you want to see it going to the upside, you do a similar case like here. So you take the impulse, retrace, and sure enough, we got rejected at the 1382 here to the dollar. I mean, it went above it wicking, but the close was exact, and then it just bearishly retested that and went back down. So these things just end up happening. It's the math. This is what it means to be precise with the math. And so you go to, this is basically finished. We've reached the 2 region. We've clearly gone beyond it. So this is finished in my mind. So now we take this one and see if it's going to continue. So we go, all right, well, this was clearly the top here from this impulse down to here. Realistically, it would be here, let's say, and then you go here. All right, so if we break below the 706 level, then the next level to see would be at 786 here for the S&P. And then that could bring you down nicely to this fair value gap down here at 38.4750. I want to be more precise with these wicks on this bearish trend-based fib extension level. Let's just get right to that point where it started to drop. And that puts us at the 786 level, which means that, you know, we could go down into this 38 region. And so this entire thing is like a kind of golden pocket for a short, and your confluence regions coincide with this fair value gap. So you got like something like that for if we break in. If not, you got these resistance points on these fair value gaps to kind of break up, you know, kind of double bottom before we kind of come back up. If that's the case of going back up to this region, you got now, you know, previous support becomes resistance, so these lines become resistance as we come out. And so you don't really need to look at these support lines. They will become the Fibonacci will become your support lines if drawn accurately. So you can use them as support and resistance without having to really look over here. Chances are if I go find like this local range, like down here or something, it's going to be here anyway. Because everything's mathematical in nature, including you and me. We're all just electrons spinning up and down and all around. Paired electrons, non-locality principle, ghost, spooky action at a distance. It's all related. We're all just one energy thing looking through each other's eyes in a mirror at ourselves. So this is the S&P. If you can't hold this 786 3914 region, expect to go down to here based off the math here. But let's look at the time frames. We got an hourly and 4 hour and 15 in favor of going up as well. Most likely we have a kind of bounce inbound for the 6 hour and above too. I'll turn off the history on this. So you could see a little bit more reset of this Williams and the 6 hour here. $12-hour also pointing down as well. You could get a little bit of rejection off the average here and more downside. 22-hour 22-hour also curving down, could get rejected here. So you're not necessarily bullish on those time frames for a full reset like what Bitcoin did. So you have a little bit more ambiguity. Let's look at the 15-minute and the hourly. So these are in good states. The 15-minute, everything's low, everything went down to complete reset levels. And yeah, the hourly as well looks to be in a good state for the most part. We don't have any divergence, which is kind of strange. Let's see. Yeah, we don't really have any divergence here. So you could wait for that to occur. You kind of go back up, come back down, create a little mini divergence here. Let's go to a smaller time frame, see if it appears there. Yeah, you do have bullish divergence on the 5-minute with 5 time frames oversold, and that's why you started to see a little bit of, so you could see a little bit more downside and spawns another divergence here. Let's go to the ES1 and see where it could possibly gap up to. So we're indeed seeing that kind of surge pre-market, so we could see a gap up when it updates this data. Because you got the thick cloud here that it could reject off of and create the double bottom scenario. You got the hourly overbought now too, so you could, you know, flag out in some nature up in here, and how far down do you go before possibly continuing higher? You know, how much is the question. So we'll come back to this. Let's look at the dollar. Dollar breaking down. We were saying it could possibly bounce at the 786, which it did not. It immediately broke down into the 618 pocket of this fib, and it's trying to find a bounce off this fib level now by the looks of it. Now if this goes up instead of down here, then generally the inverse. So the funny thing is we went sideways on the dollar, and yet Bitcoin dropped off the face of the earth, so they don't coincide in the sense that this didn't really make a run for it, and then Bitcoin still dropped down. So if this starts to go up back to where it was yesterday, does that mean Bitcoin's going to go down? Could mean that, but Bitcoin just had a massive downturn, so it could be stabilizing after that big move, completely independent of what the dollar's doing. This would probably more correspond to what the S&P is doing. And you do have this golden pocket confluence with the adaptive moving average. You do have the weighted against you at this time on the hourly. The hourly, the 15, the 1 hour, the 4 hour, the 5 minute, everything's 4 time frames oversold. You get this alert to your phone. Any asset in the world will give you these alerts if you are so inclined. And yeah, so it looks like the dollar is going to have a little bit of a bounce here. How big of a bounce into this vector candle, I have no clue. Let's go back to BTC and let's see how you're doing. So we're getting that surge as we thought to come out of this region to possibly test this 1382 level and liquidate those people as we suspected on the bubbles. All right, let's go double click back here. All right, we're getting faster. I like it. We're getting faster at doing this. I'm getting in a groove with it. I can feel. So 20. Yeah. So those guys that were underwater that are back here, we had that 220 bubble or whatever. I didn't capture it in my zooming in, so let's do it over here. There we go. This guy. So the 226 million at $20,476 in this region, kind of caked up over here. So we'll see if it goes back to that. Once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Light in the absence of eyes illuminates nothing. Visible forms are not inherent in the world. They're granted through the act of seeing. Now let's see what you guys want to do. Let's see. That's wrong. It moved from the phone. News drop. I see. Wasn't that the 4 hour from Casper on the 3-tap? Yeah, he was talking about the 3-tap in the August pattern, he called it. Thank you, Wendy, for coming on in. Love you all. I mean that. Everyone is awesome. Do you guys have anything you want me to look at? And you got all these like other time frames that you can set. These are all customizable too. Like if you're a scalper, you can set these to lower time frames. It's not necessarily higher time frame only. Like you can set this down here on the multiple time frame screen, or you can set them to everything down to 15 seconds if you want to be fun with it. I also started programming this other indicator that you need a premium account for called the Optimo, which shows multiple time frame divergence. I'm still trying to figure out what to do with that. We're never done. We're never complete. We're always moving. We're always grooving. Let's see what the liquidation levels look like. I mean, this indicator, as I said, it maxes out your cash, so you're not getting the most accurate and depiction as you do on HighBlock, which is why it's free. HighBlock is about $70 a month, so you're getting that with each daily stream from me, so I don't see why you'd go anywhere else personally. But you know, your time is your time. If you see value anywhere, please go anywhere you please. You should go to check out Rainier. Rainier gives out some fire too. Let's give a shout out to Rainier. Rainier I wish I had a permanent Discord link in my description for you guys, but you know, he puts out some bangers, and he's part of the Momentum Master crew. He puts out like things that end up playing out as well. Shout out to Rainier and shout out to everyone. So yeah, this coincides with you're getting 4.57 million and 50x up here. He becomes the liquidity funder for the upside. So it's very ironic that the shorts end up fueling the upside, and the longs end up becoming the dead weight abyss draggers to the downside that take us down too. So the more that stack down here, the more swamp of sadness takes us into the nothing. And then up here you have these guys trying to pull you up. And so if we turn this liquidation levels off real quick, so on Momentum Master A, you have these baselines, and then as long as you can hold these baselines, you're all good. So if you break below, it's an if-then statement. If you get these crossover events, if the DNA helix crosses over, this is called the fat baseline and the thin baseline. If the thin baseline crosses over the fat baseline, then you're basically done on the 5 minute, and it starts to cascade, at least in the interim. So if you see it cross over here, you could just scalp and then see if it holds the cloud, which it did, and you could be setting your stop loss into profit all the way. If you were sitting and made a session of it, you could use these scalps, and a lot of people in the Discord do. And you can basically scalp the 1 minute up and down, up and down, up and down, and just follow these alerts. And these are all alertable to your phone as well. So we reclaimed the adaptive moving average here on the 5 minute. So we could come back to this and retest it. If we reclaim it, then we can keep going higher. If this crosses over and prints a closed candle with the helix here, then we could be seeing this retest the cloud. We did say, as a rule of thumb, when you break out anywhere, if you break out of the cloud, you come back and kiss it before moving on. And this is where you can consider, you know, if it holds this ATR level, that it would be going up higher. So it goes back for this little mini fair value gap as well. This is a 5-minute fair value gap. So if you're a scalper, you could be riding these and even going to lower time frames. Although if you're new to trading, this is not recommended because you can get thoroughly wrecked like this candle here if you're don't know what you're doing. So you could come down to this cloud too. There's nothing to say that it's over right there. You could go to this cloud and get the burst as we did here, and this is what happens when it's bullish. You get these constant retests of the cloud, re-injections. Here you started to break down through it, but immediately broke back through. And so you could be getting these bounces on the cloud. You don't need patterns necessary. You need to have these kind of signals which are accurate and volume based in nature. So it's not a predictive thing. It's a leading analytical tool to help you see whether you should stay or remain or not. And then so you have these ATR things too. If you break this ATR and close beneath it, then it's going to show you a bearish projection of how much percent we need to reclaim to go continue being bullish. So as of this moment, we're still bullish as long as this ATR level is holding. And you can also set a trailing stop loss on here too. There's a function in here that you can do a conservative stop. So let's just do that. And so while it's not an exchange platform per se, you can set it on your phone or your platform as well, and it tells you at 20,075, so we can move it up to there safely if the ATR holds. And so that's a conservative ATR level, so we'll just leave it there. And if it kicks me out there, then it wasn't meant to be anyway, because it's going to go probably bearish at that point. And that's how you use the tools within that aren't even listed on the website. There's plenty more than that. You got order block finders and all sorts of other stuff to make it worth your while. Let's go to the ATR trailing stop. So we reclaimed this gap over here. We wicked up to this gap slightly. There's still a gap over on this side. So while other traders are drawing bull flags and stuff, you should be looking left at the gaps and seeing where they can reclaim these liquidity pools and imagining where these guys are in the charts that they're aiming at. Because that's all this game is just a game of traps. All right, it's not. I mean, how many poo coins do you have to see go to like a ridiculous thing without any intrinsic value to know that it's just kind of a silly game to induce an emotional response to people? They have a thing called behavioral economics. If you're interested in, check it out. It studies all the psychology of Skinner boxes and how you can activate switches in people and manipulate them using those Skinner box responses, like pigeons pressing a button to get some seed out of a box. So those low liquidity coins are the Skinner box, which gets you to invest more in a time when you get totally wrecked. So yeah, it's a way to kind of gauge that. 30 seconds for y'all. You'll be 10 seconds in the time frames a week. The swamp of sadness is a challenge, but we have the fellowship to help us. What's up, Finbook? The swamp says you must acquire the crystal to help you through. Yeah, the 1 minute is old news. We're down to the 30 second. Yes, do not to trade regular charges unless you are experienced. My electrons. Maybe show us step by step how you set an alarm on the phones. Alright. So it depends on what alarm you're looking for. If you want the alarm for these oversold and overbought time frames, like you're getting the 2 time frames overbought here, which is why you're seeing that fade on also the adaptive here. But you would have gotten that 2 to your phone. Like I could show you exactly. It's going to be out of focus, but essentially I had this on my phone that came about 6 minutes ago. And so you would get this to your phone with one function. So I understand there's a lot of people out there with free TradingView accounts, so you maybe don't have so many alerts at your disposal. I think 3 is the maximum they allow for free. So you go to the add alert on Momentum Master Ultimate and you just say create. And it's a dynamic alert, so it automatically alerts you as to what time frames are oversold at the moment it happens. So for example, the last one would have said 2 lower time frames oversold. It distinguishes lower and medium, and it tells you the stochastic values. So it would tell you what the value was at that time as well. So that's how you would do that. And then if you have an account, you'd make it open-ended, or you could set the date like 2 weeks into the future before you have to set a new one, and it'll just constantly let you know about that. And you can also do that for these crossover events on the baselines, which imply a larger sentiment to whatever side if it's crossing up a more bullish sentiment, which is also done on A as opposed to Ultimate. And you can do any cross, which will tell you up or down, or you can do the crossover or the cross under for if you're expecting it. And you can set it on whatever time frame you like. So if you want to see like Peyton was talking about the 5-day cross, kudos to Peyton on that for catching that one. Like he was saying, where was it? Oh, there we go. He was seeing this cross close and finalize on the 5-day, which was implying some more downside, and sure enough we had that swift downside drop. So you could have set this for a higher time frame, and he was the first to point out that the 8-hour was also doing that back here. So he was starting to see the bearish sentiment occur on the 8-hour back in February 20th before anything. And that's why these baselines are kind of nice, because they're a leading moving average formula. It's one of the only, it is the only that I've found leading moving average formula that's out there. So if you get these crosses, then they come up. If you get the crossovers, it goes down. And so you could set those crossover alerts as well. So there's different tools for different kits that you're into. It's customizable in any way, shape, or form. So we're seeing the top of the Keltner channel here on the 15-minute. We're likely going to get kicked out into profit, but we're sticking to the plan here. And that's how you would do it. And you just see, like, we're getting the crossover on the 5. And so if you were not in a trade and looking to scalp this thing, you could be doing the exact same thing in the opposite direction. And then what the traders in the Discord do is they switch to Heiking Ashi, and they see this crossover on Heiking Ashi, and then if it closes with no wick here, like this has an indecision doji here, and then it has a birthday candle hammer with no wick, and you have the crossover thing. And if you have another one after this crossover with no wick, then that's implying more downside. So we'll just stay to see how that plays out, or whether it holds this adaptive. And this is why they have rules in play, because if you don't see how there's a wick here, you had a crossover event but there was a wick here, so yeah, we got kicked out. So if there's a wick here, so that implied that it was going to keep going higher. You have to have no wick on the Heiking Ashi thing. I'm still a noob to it. There's totally novel concepts that have been coming out with other people in the Discord that are starting to take it to another level. I mean, shout out to Smurf who trades with no candles sometimes. It's just crazy, just using the crossover events alone. So we'll just stay and see if it closes this candle off of the adaptive, and if it doesn't, and the next candle, if this closes in this state in the next 2 minutes and 38 seconds, then you could see at least a retrace down to probably here. So you just gotta wait till it the next candle, and if there's no rejection wick, then you can ride that down, if I'm not mistaken. Scalp continuation play there was valid. Yep. Horse Farm Trading Company. Yeah, Peyton is the man. All of you are awesome. And this is where what spreading the love is about. It's not all about me, it's about you guys too. Like, I can't do this without you guys. And you guys are all awesome. Like, but this is a kind of nice thing to see them beneath the price like this. I mean, with all the higher time frames, it is what it is. If you're working on these lower time frames, all you need is that like 0.5%, like 2% in and out, and then you're happy camper, and then you can just switch it up when it's down here. If you can adjust your mindset on a dime like that, then by all means. But if you tend to get married to a trade, then you don't want to be on the wrong side of that if momentum on higher time frames kicks in. But it doesn't matter if you're in and out with the scalper and using these surgical tools with precision. So you got the cloud also thinning here too. So if you had that crossover event here and you were on the weighted moving average and you had that kind of rejection continuation wick idea and it's starting to thin, like, yeah, that was why you wouldn't have wanted to take that one as a short, valid short. And it immediately turned to the crossover. So 30 seconds, and then we'll see if it continues down on the next candle or not. So you got the also the Williams overbought with the alarm here. If you go to, I think it's the 4 minute, which Peyton's like rocking out. Yeah, that's the one that. So they would have already been in on this candle then, from 2 minutes ago, basically. So he would have already entered on this candle 2 minutes ago, actually. So he would have opened, seeing that there's no wick here on the 4 minute, he would have entered here and just seen what this is like. But you do have a thick cloud here. But let's just take it at the time frame we were looking at. So even if it was the time frame we were at, that was still the new candle was here. I think the average price was somewhere down here because it's an average price, right? And that's how you would just like kind of scalp it. So we'll wait till one more candle and then we'll just close it out there. Please post more about the Skinner boxes in the off topic. Sure. Yeah, I was into those whole like freemium games for a time and like how they induce people to spend money on those like stupid cell phone apps and stuff. And they like, you know, they create these layered economies that go nowhere, and the circular logic gets you to like no different from a pigeon, like induce the dopamine. And so trading is a lot like that, I think. You know, they try to get you to feel the euphoria and some people get addicted to the fear and the pain too. You know, Sato is one of them. So that would have been one thing, and you could just like have just taken that, you know, and just be like kind of chilling it. And then how Peyton does it is like basically like moving the stop loss into the profit as the candle closes. So by the next candle, it would move another. It would tell you where to move your stop loss down to. So you'd be moving into profit every time and protecting your entry. So I think it would be like more like back there or something. Yeah. So, I mean, I was watching somebody take a 70K account up to like 200K in like 2 hours last night. It was crazy. So just because the move is small doesn't mean you can't make money. It's about that certainty of it not drawing down from your entry point, so you could just see smooth like butter percent gains, you know? Shout out to Sato getting wrecked. Blindfold K-hole. Yeah, we'll just let it percolate a little bit. So yeah, I mean, I think rather the charts and the liquidity show us that there could be some sort of bounce up to this region after possibly double bottoming or faking outs or inducing some more. It's all about inducement and how much they get to re-enter so they can trap it. And this is nicely caked up in a manner that's already in the negative. So they could come up to that region at 20,520 or so and get that 200 million, probably all together like nearing $1 billion. Alright guys, we're gonna call it a let it percolate. Wow, 70K, let it percolate. Let's go back one last time, see how the candle closes. So for some reason or another, it doesn't come back to that point, and then you just let it ride. Oops. But it was... Yeah, and at like whatever amount leverage, you know, that's, you know, a good percent. If you get 1% at 100x leverage, that's, you know, 100%. And the point is not to experience drawdown, so that's why you crank up the notch a little bit and then leave it at that point where it doesn't experience the drawdown. And then you get that, now you're at 50%, 54%, 59%. And you could be like flirting with the percent in a pleasurable position rather than painful one. Alright, ladies and gentlemen, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable and undeniable part. Thank you for doing your part, for coming on into the live. I'll catch you guys on the flip side. Peace.